There are 4 stages every trader passes through on the way from losing money to trading professionally. Almost nobody skips a stage. Almost nobody moves through them quickly, and almost nobody tells you clearly and honestly what each stage actually feels like from the inside, which means most traders spend years wondering if what they're experiencing is normal or a sign that they should quit, or proof that they're uniquely bad at this. It isn't, it's a stage. And every single trader who has ever become consistently profitable walked through the exact same 4 stages you're either in right now or about to enter. By the end of this hour, you're going to know exactly where you stand, not vaguely, specifically. You're going to recognize the stage you're in by the precise feelings, mistakes, and internal experiences attached to it. You're going to understand what's coming next, why it will feel the way it feels, and what actually moves you from one stage to the next, because it is almost never what people assume. And I want this video to be different from anything else on this channel. As we go through each stage, I'm going to ask you directly to stop, think, and tell me in the comments where you're not, because engagement is good for the algorithm, though it is, but because naming your stage out loud, even just in a comment, is one of the fastest ways to actually absorb what this video is teaching you. Self-awareness that stays silent in your head fades by tomorrow. Self-awareness, you write down sticks, so let's go. 4 stages. Let's find out where you are. Stage 1 is called unconscious incompetence. And if that sounds clinical, let me translate it immediately into the only sentence that actually matters. This is the stage where you don't know what you don't know, and you genuinely believe trading is easier than it is. This is not an insult. Every single trader who has ever existed, including every professional you've ever watched on YouTube, lived inside this stage at some point. It is the universal entry point. There is no version of becoming a trader that skips it. Here's what it actually feels like to be inside stage 1, and I want you to listen closely, because this is where a huge percentage of you watching right now currently live. You discovered trading, maybe through a YouTube video, maybe through someone, maybe through an ad promising financial freedom, and something lit up in your mind almost instantly. You saw a chart. You saw a clear, obvious pattern. Price went up. Then it pulled back, then it continued up. And your brain, which is a remarkably good pattern recognition machine, said, that's simple. I can see that. Why wouldn't I be able to do that? That moment, the moment a chart pattern looks obvious in hindsight, is the single most dangerous moment in a trader's entire career. Because hindsight is not skill. Looking at a chart that has already finished moving and recognizing the pattern is completely different from sitting at the right edge of that chart in real time, with no idea what happens next and making a decision with real consequences attached to it. But stage 1 doesn't know that distinction exists yet, so what happens next follows an almost identical script for nearly every trader who has ever lived. You open a demo account or you fund a small live account, and you start trading based on what feels obvious. Maybe you watch a few videos about support and resistance, or moving averages, or some indicator that promises to show you exactly when to enter. And here's the part that traps so many people in this exact stage for months or sometimes years. You might actually win, not because your method works, because markets move in trends often enough, and broad directional bets in a trending market succeed often enough that early wins are extremely common. And they are almost completely disconnected from actual skill. This is the cruelest mechanism in all of trading psychology. The market's natural randomness, mixed with the simple fact that markets do trend a meaningful percentage of the time, gives stage 1 traders just enough positive reinforcement to convince them they've figured something out. A few green trades in a row, and the brain does exactly what brains are built to do. It concludes that the method worked, and it gets ready to do more of it bigger. I want you to pause here for a second, because this is your first interaction point in this video if you're currently in this stage, if you're newer to trading. If things have felt surprisingly easy so far, if you've had some early wins that felt almost effortless, I want you to comment the word stage 1 right now, not later, right now, while it's fresh, because the simple act of naming it is the first step toward actually seeing it instead of just living inside it. Let's keep going, because stage 1 has a very specific emotional signature, and understanding it will help you recognize it in yourself even faster next time. The dominant emotional state in stage 1 is confidence without evidence. It feels like excitement. It feels like having found something other people haven't figured out yet. There's often a sense of urgency, a feeling that you need to trade more, trade bigger, tell people about it, maybe even quit other pursuits, because this clearly works. Underneath that excitement, There's something else happening that the trader almost never notices at the time. There's no real risk management, not because the trader is reckless on purpose, but because stage one hasn't yet experienced a loss large enough to demand respect. Risk management isn't a real concept yet. It's something you've heard mentioned, maybe something you've nodded along to in a video, but it doesn't have weight because nothing bad has happened yet to give it weight. And then something bad happens. It always does. It's not a special event. It's mathematically inevitable because the trader has no actual edge, no consistent process, and no protection against the market's natural unpredictability. A trade that felt obvious goes against them. They don't have a plan for that because the plan was never really a plan. It was an assumption that things would keep going the way they've been going. Here's where stage one traders split into two groups, and which group you end up in says a lot about how long this stage will last for you. The first group takes the loss personally, gets emotional, and tries to win it back immediately. They increase their size. They take a revenge trade. They might even win that one too, which delays the lesson even further. This group can stay stuck in stage one for a very long time because every loss gets explained away, bad luck, fluke, the market being unfair rather than examined honestly. The second group has a different reaction. The loss actually lands. It creates a moment of genuine confusion, not the market is unfair, but wait, I don't actually understand what I'm doing. That confusion, uncomfortable as it is the doorway out of stage one. Confusion that you sit with rather than immediately explain away is the first sign of real growth. I want to give you a second comment prompt here because this next question matters. Think back to your very first real loss in trading, not a small one, a loss that actually stung. When that happened, did you take it personally and try to win it back immediately? Or did it create a moment of real confusion about what you actually understood? Comment revenge or confusion below. Whichever matches your experience. I genuinely want to see how this splits among people watching because it tells me a lot about where this audience is in their journey. Let's talk about the specific psychological markers of stage one because I want you to be able to identify this stage in someone else just as easily as in yourself. Because if you're already past it, you've probably watched a friend or a family member enter it, and recognizing it might help you help them. Stage one traders talk about trading in terms of certainty. They say things like this is definitely going up or this setup never fails. There's an absence of probabilistic thinking, the idea that every single trade has some chance of being wrong, and that being wrong is not evidence of doing something incorrectly, just a normal outcome of operating under uncertainty. Stage one hasn't internalized uncertainty yet. Everything feels like it should work, and when it doesn't, the explanation reaches outward. Bad luck, manipulation, an unfair stop hunt rather than inward. Stage one traders also chase indicators and strategies constantly, not because they lack intelligence, but because they're searching for the secret that will remove the discomfort of uncertainty entirely. They want a strategy that wins every time, and because that strategy doesn't exist, they keep moving from one approach to the next, always slightly disappointed, always sure the next one will be the one that finally works perfectly. And here's the part of stage one that almost nobody talks about honestly. This stage often involves real financial loss, not because the trader is foolish, but because this is functionally the tuition for learning that markets are harder than they look. Some traders lose a small amount and learn quickly. Some lose significant amounts before the lesson lands. The amount lost isn't a measure of intelligence. It's largely a function of how long someone stays attached to the belief that they've already figured it out. So how does a trader actually move out of stage one? Not through more information. Stage one traders often consume enormous amounts of information, videos, courses, books without it changing anything. Because information addresses the wrong problem. Stage one isn't a knowledge gap primarily, it's a humility gap. The exit from stage one requires a direct, often uncomfortable encounter with the limits of your own understanding, usually delivered by the market itself, in the form of a loss significant enough that it cannot be explained away. If you're in stage one right now, here's the single most useful thing I can tell you. The goal is not to avoid that uncomfortable encounter. You cannot strategize your way around it. The goal is to shorten how long you spend explaining it away once it happens. The faster you move from the market did this to me to I don't yet understand something important. The faster stage 1 ends, before we move into stage 2, I want one more comment from you. If you've already passed through stage 1, if you're further along in your journey, comment "I remember stage 1" below. And if you want, share in a few words what your wake-up moment actually was. I read these and I genuinely believe that traders sharing their actual wake-up moments helps the people currently in stage 1 more than almost anything I could say myself, because it makes the lesson concrete instead of abstract. Now, here's the open question stage 1 leaves behind, and it's the exact question stage 2 exists to answer. If confidence without evidence is the problem, what replaces it? The answer isn't more confidence, and it isn't the opposite, collapse, fearful uncertainty either. It's something specific, and it's exactly what we're covering next. Stage 2 is called conscious incompetence, and this is without exaggeration the most painful stage in a trader's entire development. If stage 1 is dangerous because it feels too good, stage 2 is dangerous because it feels too bad. Bad enough that this is the exact point where most traders who ever quit trading actually quit. Here's the simplest way to describe what's happening in stage 2. You now know enough to see how much you don't know, but not yet enough to fix it. You've lost the blissful ignorance of stage 1. You understand intellectually that trading requires risk management, a defined process, emotional control, statistical thinking. You can probably explain these concepts clearly to someone else. And yet, when you sit down to actually trade, you still struggle. You still make mistakes that you know in the moment are mistakes, and you make them anyway. This gap between knowing and doing is the defining feature of stage 2, and it is genuinely one of the most frustrating experiences a person can have in any skill domain, not just trading. Imagine knowing exactly what you're supposed to do, watching yourself not do it, and feeling powerless to stop the pattern in real time. That's stage 2, every session. Let's talk about what this actually looks like day to day, because the specifics matter enormously here. A stage 2 trader has usually built some kind of structure, maybe a basic strategy, maybe a few rules about risk per trade, maybe a journal they've started keeping. This is real progress compared to stage 1. But the execution of that structure is wildly inconsistent. They might follow their rules perfectly for 3 days, then break 4 of them in a single session on day 4, usually after a string of losses, or after a string of wins that made them feel invincible again, briefly resurrecting a small piece of stage 1's overconfidence. This inconsistency is incredibly confusing to live through because the trader knows they're capable of following the rules. They've done it before, sometimes for extended stretches. So when they break the rules, it doesn't feel like ignorance. It feels like failure, like weakness, like something is wrong with them specifically, since they clearly know better and still can't seem to act on it consistently. I want to stop here for your first comment prompt of this stage, because I think this next question will resonate with a huge number of you. Have you ever known with complete certainty exactly what you were supposed to do in a trade and watched yourself do the opposite anyway? Not because you forgot the rule, you knew it, you just didn't follow it. If that's happened to you, comment stage 2 below. I want you to see how many other people are nodding along with you right now, because stage 2 often feels isolating, like you're uniquely undisciplined, when in reality, it's one of the most universal experiences in this entire field. Here's what's actually happening underneath that experience, and understanding the mechanism will help the frustration make a lot more sense. Knowledge and behavior are stored and processed differently in the brain. Knowing a rule intellectually lives in a different system than the one responsible for real-time behavior under pressure and emotional activation. This is why you can read a book, fully understand a concept, agree with it completely, and still fail to apply it the moment you're actually in a trade with real money and real uncertainty in front of you. The knowledge is real, but it hasn't yet been converted into automatic behavior, and that conversion only happens through repeated, often uncomfortable practice under the exact conditions where the old pattern wants to take over. This is why stage 2 cannot be solved by reading more books or watching more videos, even though that's exactly what most stage 2 traders try to do. Because it's what worked to escape some of stage 1's confusion. They go looking for the missing piece of information, assuming there's a concept they haven't encountered yet that will finally make the gap close. But the gap in stage 2 usually isn't informational, it's experiential. The fix isn't a new idea. It's repetition under pressure with honest tracking of what actually happens versus what you intended to happen. Let's talk about the specific emotional terrain of stage 2, because it's genuinely different from anything in stage 1's. Stage 1's dominant emotion was excitement. Stage 2's dominant emotion is a strange, exhausting mixture of self-doubt and frustration. The trader starts to wonder if they're simply not cut out for this. They watch other people seemingly succeed and start to question whether there's a fundamental flaw in their own personality, too impulsive, too emotional, too impatient, that's permanently blocking their progress. This is also the stage where shame enters trading for many people. And shame is genuinely dangerous here because shame doesn't motivate good behavior. It does the opposite. A trader who breaks a rule and then spirals into self-criticism is far more likely to make an even worse decision shortly afterward, a revenge trade, an oversized position, abandoning their plan entirely for the rest of the session, because shame creates exactly the kind of emotional activation that overrides careful decision-making. The mistake creates the shame creates more emotional activation, and the emotional activation creates an even bigger mistake. It's a loop, and it's one of the primary reasons stage 2 traders sometimes blow up accounts that survive stage 1 intact. I want to comment from you on this specific point because I think it's one of the most important psychological insights in this entire stage. Has a single mistake in your trading ever spiraled into a much worse session? Simply because the first mistake made you frustrated or ashamed, and that feeling led directly to a second, bigger mistake. Comment the spiral below if that's happened to you. This pattern is incredibly common, and naming it specifically, recognizing it as the spiral rather than just a bad day, is one of the fastest ways to catch it the next time it starts. Now let's talk about something crucial: how long stage 2 actually lasts, and why the answer to that question varies so dramatically from trader to trader. There is no fixed timeline. Some traders move through stage 2 in several months. Others spend years here, cycling between periods of decent execution and periods of complete breakdown, never quite stabilizing. The single biggest factor determining how long someone stays in stage 2 is not intelligence, and it's not even motivation. Most stage 2 traders are highly motivated, often more motivated than they were in stage 1, because they've tasted enough difficulty to take this seriously. The biggest factor is the quality and honesty of their self-observation. Stage 2 traders who keep detailed, honest records of exactly when and why they break their own rules move through this stage significantly faster than traders who don't. Not because the records magically fix the behavior, but because patterns that are invisible in the moment become visible in retrospect, and visible patterns can eventually be anticipated and interrupted before they fully take over. Here's a specific common pattern worth naming directly, because so many of you watching are probably living inside it right now without having named it yet. It's called the 2 steps forward, 1 step back cycle. A trader follows their plan well for a stretch, sometimes days, sometimes weeks, and starts to feel like they've finally turned a corner. Confidence builds. And then a specific kind of session happens, often after an unusually large win, or an unusually frustrating loss where multiple rules get broken at once, and the trader ends up feeling like they're right back at the beginning, as if none of the previous progress counted for anything. This feeling, like all your progress just evaporated, is one of the most discouraging experiences in all of trading, and it is also almost universally inaccurate. The progress didn't evaporate. The skill you built during the good stretch is still there. What happened is that a strong enough emotional or psychological trigger temporarily overrode. That skill, the same way a person who has practiced public speaking for months might still freeze up the first time they speak in front of an audience that scares them more than their previous audiences did. The underlying skill is intact. The trigger was simply stronger than the trader's current ability to manage it. I want to ask you directly if you've experienced that 2 steps forward, 1 step back cycle. Comment the cycle below. And I want you to know something important. If you're in the middle of that cycle right now, it does not mean you're failing. It means you're exactly where stage 2 traders are supposed to be, doing exactly what stage 2 requires, which is slowly, unevenly, building the actual behavioral skill that stage 1 never required, because stage 1 didn't yet know it was missing. Let's talk about what actually moves a trader from stage 2 into stage 3, because this transition point is specific, and understanding it will help you recognize when you're getting close. The shift out of stage 2 happens when the gap between knowing and doing finally starts closing, not all at once, but gradually, trade by trade, session by session. The mechanism behind this is almost always the same. The trader develops what we call situational pattern recognition for their own behavior. They start to notice in real time the early signs of the moment when they're about to break a rule, the slight tightening, the urge to act faster than their plan calls for, the specific kind of trade that feels different right before they take it anyway. The first time a trader catches that moment and chooses differently, pausing instead of acting. following the rule instead of breaking it, specifically because they recognize the pattern as it was forming rather than only in hindsight. That is the single most important moment in this entire stage. It's a small moment. It often doesn't even feel significant when it happens. But it's the first piece of real automatic internalized discipline rather than discipline that only exists when things are calm and easy. These moments accumulate, slowly, then more quickly. And at some point, without a clear single line being crossed, the trader notices that the gap between knowing and doing has mostly closed. They're executing their plan most of the time, not because they're forcing themselves through willpower in every single moment, but because the right behavior has started to become the default behavior rather than the effortful exception. That shift from effortful, willpower-driven discipline to something closer to automatic default behavior is the doorway into stage 3. And I want one final comment from you before we move there. If you feel like you're starting to catch yourself in real time more often than you used to, if the gap between knowing and doing has started to feel smaller, even if it's not gone, comment "getting closer" below. That's an important signal. And I want you to acknowledge it because stage 2 traders rarely give themselves credit for partial progress. And partial progress in this stage is exactly what eventually adds up to the next one. Stage 3 is called conscious competence. And I want to start this section by telling you something that surprises almost every trader who reaches it. Stage 3 is not the relief everyone expects it to be. It's a genuine improvement over stage 2 without question, but it comes with its own specific. Often unexpected difficulty, one that nobody warns traders about because from the outside this stage looks like success. Here's the simplest description of stage 3. You can now execute your plan correctly, consistently. And you can produce real sustainable results, but it requires constant, deliberate effort. Nothing about it feels automatic yet. Every trade still requires conscious attention to your rules, your risk, your process, your good. You're just not yet effortlessly good. Think of it like driving a car for the first time after you've learned the rules of the road, but before the actions have become second nature. You check your mirrors because you remember you're supposed to, not because your hands move there automatically. You signal because you're consciously running through a checklist, not because it happens without thought. You can do everything correctly. It just takes real continuous mental effort to do it. That's stage 3 trading. The trader has internalized the lessons of stage 1's overconfidence and stage 2's painful gap between knowledge and behavior. They have a real edge now, a strategy that executed correctly produces a statistical advantage over time. They have risk management that actually functions. They have a journal, real data, real self-awareness. And when they sit down to trade, if they apply full conscious effort, they execute well. The problem is that full conscious effort is exhausting and it cannot be sustained indefinitely. I want to bring you in here with the first comment prompt of this stage because I think a lot of you are either right at this point or close to it. Do you currently feel like you know your strategy well? You can execute it correctly when you're focused and disciplined. But trading still feels mentally tiring in a way you assumed would have gone away by now. If that describes you, comment stage 3 below. This stage is often mistaken for a permanent plateau, and I want you to understand right now, before we go further, that it isn't one. It's a specific, well-defined phase with a specific way through it. Let's talk about what makes stage 3 uniquely difficult, because the difficulty here is almost invisible from the outside. A stage 3 trader can have a genuinely excellent month. Real profits. Rules followed, process intact, and then the following month results decline, not because the strategy stopped working and not because the trader suddenly became undisciplined, but because the sustained mental effort required to execute consciously. Session after session, day after day, eventually depletes us. This is a real well-documented phenomenon across nearly every skill domain that requires sustained conscious control. It's sometimes called decision fatigue or ego depletion, and it explains why even highly capable, highly disciplined people experience inconsistent performance, when every single decision requires deliberate effort rather than automatic execution. This is one of the most important things to understand about stage 3, because without understanding it, traders in this stage often do exactly the wrong thing in response to a decline in performance. They assume something is fundamentally broken, their strategy, their discipline, their psychology, and they start making dramatic changes. New strategy, new risk rules. Sometimes they even regress temporarily back into stage 2 behaviors, abandoning structure because the structure they have stopped working when in reality the structure is fine. What's depleted is the energy required to execute it consciously every single time, without exception. Here's a comment prompt that I think will land for a lot of stage 3 traders watching right now. Have you ever had a strong, disciplined stretch of trading followed by a decline, not because anything about your strategy changed, but because you simply ran out of mental energy to execute it as carefully as before? Comment depletion below if that's happened to you. This is one of the most under-discussed problems in retail trading psychology, and recognizing it by name changes how you respond to it completely. So what's the actual solution in stage 3? It is not more willpower. Trying to force more conscious effort through sheer determination is exactly the wrong response, because conscious effort is a finite resource, not an infinite one, and pushing harder against a depleted resource produces worse results, not better ones. The actual path through stage 3 involves 2 parallel processes, and I want to walk through both of them carefully because together they are what eventually produces stage 4. The first process is structural fatigue management. This means building your trading schedule and your daily routine around the reality that conscious execution depletes rather than pretending it doesn't. This looks like deliberately limiting session length rather than trading until you're mentally exhausted. It looks like building in real breaks, not just physical breaks, but genuine mental disengagement from the market between sessions. It looks like recognizing the specific signs of your own depletion, which are different for every trader, and treating those signs as a signal to stop rather than a weakness to push through stage 3. Traders who build their schedule around their actual cognitive capacity rather than around an idealized image of how much they think they should be able to handle perform dramatically more consistently than traders who try to grind through depletion using sheer determination. I want to comment here because this question matters for your own self-knowledge specifically. What are the actual early warning signs that you're becoming mentally depleted during a trading session, not financially down, but mentally tired in a way that affects your judgment? Maybe it's a specific kind of restlessness. Maybe it's noticing you're rationalizing setups more easily than usual. Comment your specific sign below. I want you to actually name it because most traders have never consciously identified their own depletion signature, which means they can't catch it until it's already caused damage. The second process running in parallel during stage 3 is repetition-driven automaticity. This is the slower, less controllable process, and it's the one that eventually transforms conscious competence into the unconscious, effortless competence of stage 4. Every time a stage 3 trader executes their process correctly, checks their criteria, follows their risk rules, manages their exit according to plan, that correct execution gets slightly reinforced at a level below conscious awareness. This is not something you can rush through sheer desire. It happens through volume, specifically through volume of correctly executed repetitions, not simply volume of total trades. A trader who takes 100 trades while frequently breaking their own rules builds far less automaticity than a trader who takes 50 trades while consistently following their process. Because the brain is reinforcing whatever is actually being repeated, rule following or rule breaking, not just trading in some generic sense. This is why the structural fatigue management piece matters so much, and why the 2 processes are linked rather than separate. A trader who burns out from depletion and starts breaking rules due to exhaustion is not just having a bad session, they are actively reinforcing the wrong pattern. Slowing down the automaticity process that would otherwise be quietly building your future stage 4 self. Let's talk about a specific emotional experience that's extremely common in stage 3, because I think naming it will help a lot of you feel less alone in it. It's a strange kind of impatience that's different from the impatience of earlier stages. Stage 3 traders often know intellectually that they're doing the right things. They can see real proof in their data. Their process is sound, their results over a meaningful sample are genuinely good, and yet there's a persistent frustration that trading still feels hard. That it still requires this much conscious effort. There's a sense of, shouldn't this be easier by now? This impatience is understandable, but it's based on a misunderstanding of how skill acquisition actually works in any complex domain. Conscious competence genuinely does feel effortful for a meaningful period of time, sometimes a long period before it transitions into something more automatic. There is no shortcut through this. The transition happens through accumulated, correctly executed repetition, and accumulated repetition simply takes the time time that it takes. Wanting it to happen faster doesn't make it happen faster, and in fact, the frustration itself can become a new source of the very depletion that's slowing the process down. I want one more comment from you here because I think this specific reframe matters. If you felt frustrated that trading still requires so much conscious effort, even though you know your process works and you can see it in your results. Comment, shouldn't this be easier, below. I want you to see that this exact frustration is something nearly every trader who eventually reaches true mastery experienced at this exact stage. It is not a sign that something is wrong. It's a sign that you're in the middle of the specific kind of work that automaticity requires. Here's how a trader actually knows they're approaching the exit of stage 3. And entering stage 4, the signal isn't dramatic, it's quiet. It shows up as moments first occasional, then increasingly frequent, where a correct trading decision happens without the trader consciously running through their checklist first. They notice almost with surprise that they already passed on a setup that didn't meet their criteria before they even consciously evaluated it against their written rules. They notice that proper position sizing happened automatically without the deliberate calculation that used to be required every single time. These moments of unconscious correct execution start small and rare. And then gradually they start happening more often than the consciously effortful version that shift from conscious effort being the default to automatic correct behavior being the default. With conscious effort only needed in unusual or high-stakes situations is the actual transition into stage 4. Before we move there, I want a final comment prompt for this stage because I think it's an important one to sit with regardless of where you currently are in your journey. If you're currently in stage 3, comment how long you feel like you've been here: weeks, months, longer. I want you to see the range of answers other people give because stage 3's duration varies enormously between traders, and seeing that range tends to reduce the unhelpful comparison. So many traders make against an imagined normal timeline that doesn't actually exist. Stage 4 is called unconscious competence. And I want to be very careful about how I describe this stage because it is the most misunderstood of all 4, largely because of how it's portrayed by people selling the idea of effortless trading success. And that portrayal is genuinely misleading in an important way. Here's the accurate description. Stage 4 is the stage where correct trading behavior has become largely automatic. The trader executes their process without the heavy conscious effort that defines stage 3. Good decisions happen with a kind of quiet, almost unremarkable consistency. Risk management isn't something they have to remember anymore. It's simply how they trade the same way an experienced driver doesn't consciously think through every single motion involved in changing lanes. This sounds like the finish line. And in an important sense, it is the end of this particular developmental arc. But I want to correct 2 misconceptions about stage 4 immediately, because believing either of them causes real problems. The first misconception is that stage 4 means trading becomes easy in the sense of requiring no further attention or care. This isn't accurate. Stage 4 traders still pay close attention to the market, still respect risk, still take this seriously. What's changed isn't the level of respect for the process, it's that the process no longer requires the same exhausting, deliberate effort that it did in stage 3. The attention becomes more like the attention an experienced musician pays while playing a piece they know deeply. Present, real, engaged, but not effortful in the way it was during early practice. The second misconception is more dangerous, and it's the one I want to spend real time on because I think it's responsible for a meaningful number of traders who reach stage 4 and then later experience a serious setback that confuses them deeply. Stage 4 is not permanent immunity from the earlier stages. I want to repeat that because it matters enormously. Reaching stage 4 does not mean you can never again experience the overconfidence of stage 1, the painful gap of stage 2, or the depleting effort of stage 3. Specific conditions can push even an experienced, genuinely skilled stage 4 trader backward temporarily into an earlier stage's patterns. I want to comment from you here because I think this point deserves real attention before we go further. If you've ever heard a story maybe from a trader you follow, maybe from your own experience, if you've been trading a long time about an experienced trader who suddenly made a string of beginner-level mistakes after years of consistent success, comment regression below. This happens more often than people in this space like to admit, and understanding why it happens is one of the most protective pieces of psychology you can carry with you, regardless of what stage you're currently in. Let's talk about what actually causes this regression because it's specific and predictable. not random. The most common trigger is a significant life change that increases overall psychological load separate from trading entirely, a major financial pressure outside of trading. A health issue, a relationship breakdown, something that consumes a large portion of a person's emotional and cognitive bandwidth, because stage 4's automaticity is real but not infinitely resilient. Severe enough external pressure can temporarily overwhelm it, pushing the trader back toward the more effortful, more error-prone patterns of stage 3, or even stage 2, simply because the automatic systems that normally handle trading decisions are competing with an unusually large amount of psychological load from elsewhere in the trader's life. The second common trigger is a significant change in market conditions that falls outside the range of conditions the trader's automaticity was built around. A trader who developed deep automatic skill primarily in trending markets might find that skill doesn't transfer cleanly to a prolonged, choppy, range-bound environment. And the automatic patterns that worked beautifully in one context produce poor results in another, at least until new automaticity develops for the new conditions. The third trigger, and arguably the most psychologically interesting one, is success itself. A stage 4 trader who experiences an unusually large win or an unusually long winning streak can experience a kind of temporary return to stage 1's overconfidence, taking on more risk than their actual process calls for, deviating from rules that have served them well for years. Because the recent success created a feeling of invincibility that briefly overrides the deeper, more measured automaticity that took years to build. I want to comment prompt here specifically about this third trigger because I think it's the most surprising one for people to hear. Does it surprise you that an experienced, skilled trader can be pushed backward by too much success rather than by failure? Common success can backfire below if that idea is new to you. I think this is one of the most important and least discussed ideas in this entire field because almost all trading psychology content focuses on managing losses, and almost none of it focuses on managing this psychological risk that comes from winning. So how does a stage 4 trader handle these regression winners tree trader? Is the speed and quality of recognition. A stage 4 trader who slips backward usually catches it faster, sometimes within a single session, sometimes within a few days because they have built deep self-awareness and detailed self-tracking habits over the years it took to get here. They recognize the early signs of overconfidence or rule-breaking far more quickly than someone encountering those patterns for the first time. And because they recognize it faster, the regression tends to be smaller and shorter-lived, a brief stumble rather than a prolonged crisis. This is actually one of the most important practical takeaways from understanding all 4 stages together. The goal isn't to reach some mythical state of permanent, unshakable mastery. That state doesn't exist for anyone in any skill domain. Under all possible conditions, the realistic goal is to build deep enough self-awareness and strong enough systems that when regression happens, and it eventually will, for everyone under the right combination of pressures, you catch it quickly and correct course before serious damage occurs. Let's talk about what stage 4 actually feels like on a typical day, because I think the emotional texture of this stage is genuinely different from anything in the previous 3, and it's worth describing clearly. Trading in stage 4 often feels notably calm, not numb, not disengaged. Calm in the sense that the outcome of any individual trade doesn't carry the same emotional weight it once did, because the trader has, through years of accumulated experience and data, internalized something that earlier stages only understood intellectually, that any single trade is largely meaningless on its own, and what actually matters is the quality of execution across a large number of trades over time. Losses still register, but they register as expected. Ordinary events within a process the trader trusts deeply rather than as personal failures or signs that something is wrong. There's also a specific kind of confidence in stage 4 that's completely different from stage 1's confidence, even though from the outside they might look superficially similar. Stage 1's confidence is based on a small number of unexamined wins and an absence of real understanding about what could go wrong. Stage 4's confidence is based on a large, honestly examined body of evidence, years of data, both wins and losses, fully accounted for, and a deep tested understanding of exactly what can go wrong and how the trader's systems are built to handle it. When it does, one confidence is fragile because it's never been tested, the other is resilient because it's been tested repeatedly and is held up. I want one more comment prompt here because I think this distinction is worth applying directly to wherever you currently are. Think honestly about your own confidence in your trading right now. Is it based primarily on a string of recent results, or is it based on a long? Honestly examine track record that includes plenty of losses you fully accounted for. Comment tested or untested below. Depending on which one more honestly describes your current confidence, this isn't meant to discourage anyone, it's meant to help you locate with real precision which kind of confidence you're currently building on. Now, I want to bring all 4 stages together because I think seeing them as a complete arc rather than 4 separate ideas is what makes this framework actually useful going forward. Stage 1 is unconscious incompetence, confidence without evidence, where the trader doesn't yet know what they don't know. And the exit requires an honest, often uncomfortable encounter with the limits of their own understanding. Stage 2 is conscious incompetence, the painful gap between knowing the right thing and consistently doing it, where shame and self-criticism make the gap worse. And the exit requires honest self-tracking and the slow accumulation of moments where the trader catches themselves and chooses differently in real time. Stage 3 is conscious competence, real skill that requires constant, deliberate, exhausting effort to execute, where the danger is mistaking depletion for failure, and the exit requires both protecting your mental energy and accumulating enough correctly executed repetitions for automaticity to gradually take over. Stage 4 is unconscious competence, skill that has become largely automatic, calm, and resilient, but not permanently immune to regression under the right combination of external pressure, unfamiliar market conditions, or even excessive success, where the real goal is fast recognition and correction rather than an impossible permanent immunity. I want to ask you for one final comment before we close this out, and I want this one to be the most honest one yet, based on everything you just heard across all 4 stages. Which one are you actually in right now? Not which one you wish you were in, not which one sounds the most impressive. The one that actually honestly matches your current experience. Comment your stage number below, 1, 2, 3, or 4. And if you're comfortable, say a single sentence about what specifically makes you confident that's where you are. I'm asking for this because I think there's real value in a community of people at every stage of this journey being visible to each other in the comments below this video. If you're in stage 1 or 2, scrolling through comments from people further along can show you concretely that the difficulty you're experiencing right now is temporary and survivable. And if you're in stage 3 or 4, responding to someone earlier in their journey, even briefly, reinforces your own understanding of how far you've actually come, which is easy to lose sight of when you're focused on whatever's currently hard about your own stage. Here's what I want you to take away from this entire hour, more than any single concept inside it. Wherever you are right now is not a verdict on your potential. It's a stage every single trader who has ever achieved real sustainable success in this field walked through every one of these 4 stages in order without skipping any of them. The painful parts you're experiencing right now, the overconfidence you can't yet see in yourself, the gap between knowing and doing, the exhausting effort of conscious competence, or even the unexpected regressions that can happen after years of success. None of it is unique to you, and none of it is a sign that you're uniquely unsuited for this. What separates traders who eventually make it through to genuine sustainable competence from those who don't is rarely talent. And it's rarely even motivation in the way most people think about it. It's the willingness to honestly locate yourself in this process, stage by stage, rather than pretending to be further along than you actually are, or giving up because you assume the difficulty you're feeling meant something was uniquely wrong with you. You now have the map. You know what each stage looks like, feels like, and what actually moves you through it. The only question left is whether you'll use that map honestly, checking in with yourself regularly, tracking where you actually are rather than where you wish you were. And trusting that the stage you're in right now, no matter how uncomfortable it feels, is simply one part of a process that has worked for every single trader who has ever walked through it before you. But knowing your stage and having the discipline to act consistently within it are 2 different things. And there's a specific reason even traders who understand exactly which stage they're in still struggle to apply that knowledge consistently day after day. When real pressure is on the line, that's exactly what the next video is going to cover. Watch it next. And bring your stage number with you, because what comes next builds directly on exactly where you just told me you are.